Hey everybody, hope all is well. It's Will here. Welcome back to another episode of the Blockware Intelligence YouTube channel. As always, we're going to be going over some interesting trends from this week, try to keep you guys updated on some things that you maybe should be aware about. So with September behind us, which has historically been bearish for Bitcoin, we now head into Q4, and Q4 is skewed bullish for BTC with 6 out of 10 of Bitcoin's quarterly candles being positive, which is 60%. So let's go ahead and dive into some interesting trends from this week. Here you can just see some levels that I drew out. This is just purely price structure. I think this 50K level is really important because psychological level, obviously, but also this is the point of breakdown from earlier this year. So you can't see this, if I extended this to the left, you saw, higher lows, higher highs. And then down here, we set this lower low, came back up, set a lower high. And then this breakdown below the lower low was confirmation that we had broken market structure. So if we can get back above that point of breakdown, that'll be a really crucial level for, I think, market psychology in general. Let's start with this chart, which is a heat map of all the bids and asks on Bitfinex. And so this is just a heat map of all those bids and asks plotted out. And you'll see that little cluster of colors. That's a cluster of bids. And so this is important for you to keep in mind for two reasons. So there's kind of a bull and bear case here. So the bullish case is obviously that there's a floor set below the price with these massive bids, right? And the bull whales have set this concrete floor. And the bearish case is a bit more nuanced. So sometimes these bid and ask walls can both be used as psyops in the market. So for the average retail guy, they may look at this and say, there's a huge, there's just a huge floor below us. There's no way we're going to go below that. So every time the market trades down towards that wall, right, towards that floor, you start to see people, either unwind their shorts or open longs right above, trying to front run those bids. And so what that can create, if someone is doing this, is liquidity for them to actually exit the market, right? So it looks like they're setting this floor when in reality, they're basically, creating liquidity for themselves to exit. And so conversely, same thing can be done with these big walls of asks, right? So you're basically capping the price off because no one wants to buy into that giant wall of death. and so every time, price runs up towards the ceiling, you start to see people front run that, unload their longs or open shorts. And on the other side of that, you're actually having the market participants that set that wall open longs. And so, yeah, I'm not saying that these bids are psyop because you actually started to see them fill the other day. But, it's just something to keep in mind where, if you, obviously what you don't want to see is the wall get pulled because then it would be obvious that these are spoof bids. But it's hard, going back to like maybe mid to even early 2020. It's hard to find a time where bids were really this thick, especially on Bitfinex. And I, I'm not an expert on order flow or anything, but, I watch these heat maps a fair amount, and Bitfinex whales, of all the exchanges seem to have, more influence than most of the other major exchanges. So this is our good old friend SOPR. Talk about him almost every week. SOPR is, of course, a ratio of profit, that held by the market on every given day. So you're taking a ratio of all the coins trading in profit and loss, and you get SOPR, a spend output profit ratio. And so what we're looking at here is a SOPR, which is adjusted SOPR. So it's filtering out all the outputs under an hour to basically filter out some of that noise, right? And then we add a 7-day moving average. And so what we get is essentially this weekly SOPR with the 7-day moving average to kind of look at a bit more of a broader trend. And so what we see is that we actually just bounced off our 1 threshold. So as we talk about often, the one is neutral, right? Above 1, you're trading in a state of profit, below in a state of loss. So when you're in a bear market, you want to basically fade all these rallies to 1. And then if you're in a bullish trend, you want to buy all the dips along that 1 threshold. And so we've just retested. We want to now see us, obviously would be nice to start us to just see us moving up, like, in late 2020, but at least stabilizing above this 1 threshold, perhaps, coming back down and tapping it again and bouncing off 1, but definitely stabilizing at the minimum. Next, we're looking at our entity flows. So we're just comparing the behavior of all the different market participants, and we separate them into cohorts based off their size of their holdings. So whales have been buying, as we've been covering very closely since late July. We've seen shrimp, crabs, fish, and octopus all stacking harder than ever. And so for anybody who doesn't know what that means, it's just 0.1 to 1 are a shrimp. We have 1 to 10, and then we're also talking about 10 to 100. And then we have our 100 to 1,000. And this one is the one that hasn't been accumulating as heavily as the other cohorts generally. But we have started to see them buy over the last, call it 3 weeks. But the main cohort that I have my eyes on, obviously, is whales. But it's interesting to start to see uptick in all these cohorts in unison, where you have basically every major category of market participants buying in at the same time. So where are the coins coming from? And the answer is exchanges. And so exchanges are down 2,869 BTC this week, which is $134 million. They're down 62,251 BTC in the last month, which is $3.2 billion roughly. I think I used 47,000 BTC for those calculations. At the same time, we're seeing Bitcoin continually getting locked up by these long-term investors. And this is shown by our liquid supply shock ratio. So liquid supply is defined as entities that take in, right? They're taking in coins and holding on to at least 75% of them. Liquid is 50%, highly liquid is 25%. So those guys are moving out way more coins than they're moving in on a daily basis. And so I'd like to look at this as the movement of coins, because the liquid supply shock ratio is a ratio of illiquid supply to highly liquid and liquid supply. So I like to look at it as the ratio between strong and weak hands. So you're tracking that movement. So what you see is this was a leading indicator before the drop in May, as you started to see coins becoming liquid and like waves of coins coming onto exchanges. We had this bullish divergence down in the bottom of that range, over the summer. We saw coins getting locked up by long-term investors and coins being pulled off exchanges while price was grinding sideways bearish. And recently, so we saw a bit of a cool off in that. Now, recently, we've seen another divergence between these, between both, ratios and price. So price has been grinding sideways bearish, while you've seen coins getting locked up by these long-term investors and also coins moving off exchanges. So next metric, I wanted to make it a little fun. I'd like to throw in some of my own stuff that I put together just to give you guys some unique content. Last week I put in the liquid supply floor. This week is my delta valuation model. So what this is using is delta cap, which was conceptualized by David Puel. And this is the difference between the average cap, which is just the all-time moving average capitalization of Bitcoin. And then you're subtracting that from realized cap. And the realized cap is the capitalization based off of when coins were last moved. So for realized cap, you can think of it like if Roger Ver had 100,000 BTC, he bought them at $1, hasn't moved them. In market cap terms, you're talking those coins are now worth $4.7 billion. But because he still hasn't moved them since then, since they were last worth $1, in realized cap, that's only adding $100,000. And so this is basically an on-chain VWAP, and you're getting basically the cost basis of all the investors in the market. And so subtracting the two, you get delta cap. And so in this chart, delta cap is shown by the green line, and it's caught historically the bottoms almost to the tick, right? And you take a multiple of this and you get the delta cap model. And interestingly enough, it also captured some of the major tops. And I kind of highlighted them with these little red circles here and the bottoms with the little green circle. And then you take the mean of the two and you get this middle blue line. And you see like this has been another interesting level for price to interact with. The one that price stands out the most is in 2019. This is where the 2019 little bull run bounced off of. So just another model, throwing that out there. Just add it to the stash. I'm going to try to keep creating new stuff for you guys, just so you have some something unique to look at every week. And the main bear case here remains the number of active entities. And so when you look at transaction count, the mempool, overall volume, active entities, net entities growth, which is subtracting entities coming off the network from new entities coming on the network. This could be seen as a bearish case because you could argue that there's just low demand to use the network, right? But the counter argument would be that you have speculative market participants that are now gone, and you can look at other things like you see Coinbase app downloads moving down, Google search trends, obviously. Um, Also, you had batching done by exchanges, which this is something I'm not super knowledgeable about, but I've heard from several people that are active in the exchange industry that these exchanges are now using batching to save money on transaction costs. And then lastly, you're starting to see transactions migrate to the Lightning Network. And I think this one is probably, although is probably the most popular narrative for Bitcoiners, I think it's probably the least influential of the three, just because the Lightning Network is growing, and we're about to get into that right after this metric. But I still don't think it's that large to the point that it would be sucking out transactional activity that heavily. But who knows? I could be wrong, because the Lightning Network data we're looking at is just the public data. So the private channels, private nodes could be way larger than what we're seeing. But I don't think it has at this time that large of an impact that it would suck that much transactional activity away from the network. I just think it's just reflective of there's less speculative market participants. And also, when you look at the size of transactions on every given day, you're seeing larger transactions. And so you're seeing a decline in these smaller, $1 to $100, $100 to $1,000, these more retail sized, transaction size that you'd see in, some kind of speculative bull run that would dominate, right? And then on a similar note, as mentioned, here are some of our networks or Lightning Network statistics. And so you're just seeing unprecedented growth on Lightning Network, guys. Like this is crazy. Like some of these charts, I mean, there's not even doing it justice. If I were to zoom in on this chart alone, I mean, it's just like straight up. So we have in the top left, Lightning Network capacity, top right, Lightning Network, and the number of nodes. On the bottom left, number of channels, and the bottom right, the channel size, so the mean or the average channel size. And so, I mean, over the last couple months, especially over the last month or so, you've seen this large uptick in all of these metrics, especially the average channel size and the Lightning Network capacity. And obviously, this is a great sign for the Bitcoin network. Here at Blockware, we're bullish on the Lightning Network, and we see it as crucial for Bitcoin to inevitably make that shift over to a medium of exchange, whereas it's dominated as a store of value. Right? We talk about Bitcoin is the most efficient way to transport value across space and time. The Lightning Network will help us transition into that phase of being a medium of exchange. And then lastly, let's take a peek at what's going on with miners. So what we have here is in the blue line, difficulty, in the orange line is hash. This is interesting because we've had 5 straight positive difficulty adjustments. And so this is just reflective of the fact that hash is coming on the network really aggressively. So, the difficulty adjustment is one of Satoshi's, smartest creations, you could say. And it basically ties the issuance to the energy that's securing the network, right? And so whenever hash is coming back on the network, you have positive difficulty adjustment. Whenever hash comes off the network, you have negative difficulty adjustment. The last time we had 5 positive difficulty adjustments was early 2020. We had 4 earlier this year, but the last time we had 5 was early 2020. So that's just, a reflection as you'll see also in this, just looking at the orange line, how aggressively hash is coming back online. And be sure to check out at the bottom the Bitcoin related equity section written by Blake Davis. He did a really good job, went really in depth this week. So be sure to also give him a follow on Twitter. Check out some of the content he's pumping out. And that's all I got for this week, guys. The podcast with this week is Stefan Livera. That should be out Sunday, I believe. So I hope you enjoy that as well. It was a great conversation. We talk about the Bitcoin community, building a following, building an internet presence, some of those things. So it should be helpful. Just trying to learn more every week, and hopefully you guys are learning with me. So take it easy. Hope you guys have a great weekend. Yeah. See ya. Cheers.